part 3 is asking us to calculate healthy smoothie shakes operating income. So what we are going to do, first of all, we know what our contribution margin is. We just calculated that as being $4 per unit. So we'll just enter in your contribution margin per unit, which is $4. Then we're told the number of units sold, and you're given that in the problem. It's 4,000 units. So this gives you a contribution margin of $16,000. So this is really like a shortcut to completing your income statement. So you now have your contribution margin. The next thing you want to do is deduct your fixed cost, and the fixed expenses, we're told in the problem, that's $5,000. So we'll key in 5,000. So that means you had an operating income of $11,000. So as you can see, once you know your contribution margin per unit and you know how many units you sold, you can very quickly identify what your operating income would be. Now it's important to distinguish between managerial accounting and financial accounting. When you're preparing your financial statements as under financial accounting and you're going to issue them in an annual report, you wouldn't use this method. You would come up with the same income, but you would have to use your full income statement format. Well, the purpose of this shortcut method is to enable the organization to very quickly identify if they make various changes, say in the selling price or in their variable cost. They can very quickly see the impact it would have on their operating income without a whole bunch of calculations. So that ends part 3.